Myself Prakash sir of Neit Computer official tutorial platform. Congratulate you. In this lesson, I will discuss some important points about different types of accounting. What is the meaning of accounting? Accounting is the process or procedure or system of recording and summarizing the financial transactions of a business, which is interpreted, classified and communicated. It is also defined as the process of recording and managing financial accounts of a firm or business systematically. Who is the father of accounting? Luca Pacioli, an European accountant. This person is the father of accounting. First described the system of a double entry bookkeeping in the year of 1494. So he is also called as the father of bookkeeping. Who is the father of accountancy of India? K.S. Iyer, Sri Kalyan Subramani Iyer. This person is the father of accounting of India. You should have to remember this person because he has given us the concept of accountancy in our country. What are different branches of accounting? Financial accounting, managerial accounting, cost accounting, audit accounting, tax accounting, project accounting, forensic accounting and public accounting. Let us discuss one by one what is the meaning of financial accounting. Financial accounting is the branch of accounting that is concerned with summary, analysis and reporting of financial transactions to a business over a period of time. Managerial accounting is called as the management accounting that creates statements, reports and documents which is helpful to the management in making better decision. Then point is about cost accounting. Cost accounting is to capture cost of a production of a firm by assessing cost of each step of a production as well as a fixed cost. Auditing refers to inspection of various books of accounts by an auditor to check departments following documented systems of recording transactions. It is for ascertaining the accuracy of financial statements. This is called as auditing. Tax accounting means tax accounting makes a focus on taxes instead of public financial statements. Project accounting is a type of managerial accounting oriented towards the goal of a project management and delivery of the organization. Forensic accounting is a combination of accounting and investigative techniques used to discover financial crimes. Public accounting refers to a business that provides accounting services to other firms. What is capital in accountancy? Accountancy capital कहले आमे कौन बुझंती? The total amount invested by the owner of the business or by the proprietor of the business is called as a capital. And we can also define excess of assets over the liabilities is also known as capital. So let us check. Assets is equal to equity of owner plus liability. This is the mathematical derivation we can define. The sum of owner's equity and liability becomes asset. Take an example. Suppose owner's equity means what are the things presently possessed by the owner. Its cost, suppose you take an example, 3.50 lakhs and the liability is 150 lakhs. Then the summation of 350 lakhs and 150 lakhs becomes 5 lakhs. So that is why the asset of this organization is 5 lakhs because the equity of the owner plus the liability of the owner amount. How do you define equity of a firm? The net difference between a company's total asset and its total liability is called as equity. So that is why we can describe equity is equal to total asset minus total liability. In my previous point of view, I discussed total asset is equal to the owner's equity plus liability becomes total asset. And here we can take an example. Total asset value 5 lakhs and total liability value 1,50,000. 1,50,000 is deducted from 5 lakhs. Then the equity value becomes 3,50,000. That means we can describe equity is equal to total asset minus total liability, and liability is equal to total asset minus equity. It is also called as the equation of asset, liability and equity. The example of a total equity is company shares and loans available to the business. Here I have given the example of equity in a real estate. Just to check, the market value of real estate is 1,80,000 and mortgage outstanding value of this real estate is 1,20,000. 1,20,000 will be deducted from 1,80,000 and the equity value becomes 60,000. That means the equity value of a real estate becomes 60,000. What is COA? Charts of accounts. It is a financial and organizational tool that provides an index of every accounts in an accounting system. This is the index. This is the listing of accounts. What is bookkeeping in accountancy? What is the meaning of bookkeeping in accountancy? Bookkeeping is the process of recording financial transactions of a company into organized accounts on a daily basis. This is the process of recording the financial transaction of the organization. It may be single entry and double entry bookkeeping system. What are three types of accounts in accounting point of view? This is a very important point. And let us come to the point of different types of accounts. There are three types of accounts such as a personal account, then real account and nominal account. Anybody who will work in accounting package Tally, he should have complete knowledge on the concept of a personal account, the concept of a real account and the concept of a nominal account and the golden rules to be followed by all these accounts. If we do not have a knowledge of these accounts and their golden rules, then we cannot do any transaction or voucher entry. What do you mean by personal account? What is the meaning of personal account? What is the system of personal account? Let us come to discuss. Accounts relating to individual human beings or organization directly or indirectly is called as a personal account. जदि आम कहवा कौन लोक ना कौन ऑर्गेनाइजेशन ना कौन ब्लॉक क्लब ना किंबा कौन बैंक ना जदि आम लेजर करूँ अकाउंट करूँ दैट इज एग्जांपल ऑफ अ पर्सनल अकाउंट. And whenever we do transaction for personal account and about credit and debit, then we have to follow the golden rule of a personal account, that is debit is the receiver and credit is the giver. The person who receives, that is called, he is called debit, and the person who gives, he is called credit. You just check. There is an example I have already mentioned here. Mr. Rajesh paid Rs 5,000 to Archana. Now according to this example, Archana is the receiver and Rajesh is the giver. So that is why Archana becomes a debit and Rajesh becomes a credit. Rajesh account becomes a credit and Archana account becomes a debit because Archana is the receiver here. Then as per the next example, Rajesh received 5,000 from Archana. So now in this case, Archana is the giver and Rajesh is the receiver. So that is why Rajesh account becomes a debit and the Archana account becomes a credit. The example of a personal account is customers, vendors, salary accounts of employees, drawings and capital accounts of the owners. Then we think, what do you mean by real account? Accounts of tangible and intangible assets and a property of anything possessed by the business is called as real account. Anything possessed by the business, anything possessed by the owner of the business, anything possessed by the firm, that is called as real account. We take an example of a cash. This is the very important example, cash. Whenever cash is coming to the firm, that time cash becomes a debit, and whenever cash is going to from the firm, that time cash account becomes a credit. So cash account is the important example of a real account. So that cash account becomes a debit during income time, and cash account becomes a credit during expenditure time. Whenever we are investing money from the cash account, that time cash account becomes a credit. Whenever cash is coming to the account, cash account, that time our cash account becomes a debit. This is the system of the firm. Asset account, example is cash, accounts receivable, building, machinery, furniture, etc. These are the example of asset accounts. The example of a liability account, accounts payable, wages payable, these are the example of a liabilities accounts. Stockholders equity accounts, stock, retained earnings, etc. These are the example of a stockholders equity account. So that is why we conclude, according to the system of a real account, debit what comes in and credit what goes out. Whenever cash is coming to the cash account, that time cash becomes a debit. It follows the rule of what comes in. And whenever cash is going from the account at the time of expenditure, that example becomes what goes out, that is called as a credit. What is nominal account? The last point is nominal account. Account related to and associated with expenses, losses, income or gains of a firm, that is called as a nominal account. There are different type of expenditure, different ways of losses, different methods of different way of income or different way of gains of the firm. So all these are belongs to nominal account. Example is purchase account, sale account, salary account, commission account. These are the example of a nominal account. Nominal accounts are also called as temporary accounts. Temporary accounts include revenue, expense and gain and loss accounts. These are the example of a temporary accounts. So as per the golden rule of a nominal account, we can say expenses and losses becomes a debit and income and gain becomes a credit. Whenever we spend money, whenever we do any expenditure on any head, that head becomes a debit, and we got income from any head, that account becomes a credit. So you just check my example. Suppose a Neit computer paid 50,000 as a salary to Mr. Das, then salary ledger becomes a debit because this is the head of expenditure. Salary payment is the head of expenditure. So that is why salary account becomes a debit. And Neit computer received government aid 20,000, then government aid ledger becomes a credit because this head is the head of income from which we are getting money. So that is why government aid head becomes a credit and salary head becomes a debit.